Inflation, check. 2000, check. 2008, check. 2022, check. The old saying goes, when it rains, it pours. And when it comes to the stock market, 2022 proved to be raining negative returns, as the S&P 500 dropped 25% year to date. Now, no one knows exactly how far it'll go. Maybe there is one person, and he also predicted the 2008 financial crisis. I'm of course talking about Michael Burry, who correctly predicted the financial and real estate collapse of 2008 and made a huge profit depicted in the movie The Big Short. Also known as the Great Recession, it was simply the biggest economic downturn since the Great Depression that lasted from 1929 to 1939. Just 20 years shy of a century between one another. The Great Recession of 2008 saw stock prices crash, housing prices plummet, and saw the biggest US bankruptcy ever recorded. When Lehman Brothers, the then fourth largest investment bank in the United States, collapsed. While there were major signs leading to the inevitable, most analysts only caught wind of the impending recession until we were already deep in the eye of the hurricane. Now, Michael Burry is at it again. This time, he's predicting what could be the biggest crash since the Great Depression of the 1920s, and might even put the 2008 financial crisis to shame. Let's first start and find out who this modern-day Nostradamus is. Michael James Burry is an American investor, hedge fund manager, and physician who was able to predict the Great Recession in early 2005. Since then, Burry has made a name for himself in the field of economics and investments, with many people believing his analysis and predictions. Recently, Burry has made a bold claim that the stock market, crypto market, and other assets are about to experience an epic crash of great proportions. What are the legendary investor's reasons to claim such a bold statement, and how much water does his prediction hold? Will he successfully predict another colossal economic downturn? Or will he finally be proven wrong? Before heading to his bold predictions for the 2022 market crash, let's first establish how Burry has made a name for himself before and after the 2008 Great Recession, as well as how he shorts the market. Burry initially worked as a neurology and pathology resident in Stanford Hospital. He then left to start his own hedge fund in 1996. Burry was so successful with his stock picks that American registered investment advisor, the Vanguard Group, and insurance and related financial services holding company, White Mountains Insurance Group, started following his investment choices. In November 2000, Burry started the hedge fund Scion Capital, which was widely profitable from the get-go. By the end of 2004, he was managing $600 million and turning money away to fully serve and focus on his current clientele. Then by 2005, Burry shifted his focus on the subprime market. This is when Burry predicted that the real estate bubble was bound to collapse as early as 2007. Thanks to his analysis of mortgage lending practices in 2003 and 2004 that led him to the conclusion that subprime mortgages and related bonds would start to lose value when the original rates were replaced by higher rates. This led Burry to short the market and instead focus on getting investment firms to sell him credit default swaps. Financial website Investopedia defines short selling as an investment activity in which the investor borrows securities and sells them in the hopes of then purchasing the securities at a lower price in the future. Investors did not like Burry's decision, as they did not see what Burry saw, with some going to the extent of withdrawing their invested capital. Ultimately, however, Burry's analysis was correct, making a profit of over $800 million, making returns of 489.34%, while the well-renowned S&P 500 only saw returns of under 3% during the same period. Burry's decision to short the market allowed him and his investors to net a huge profit when almost everyone else during this time was losing money. This huge triumph will forever be etched in the world of economics, investments, and finances, and is memorialized through the 2015 Academy Award-winning American biographical comedy drama film, The Big Short. Since then, Burry has reopened his hedge fund Scion Asset Management and made quite a name in his social media accounts. His Twitter account is well known for tweets with bold financial analysis and predictions that would often be deleted in a short notice. It's in one of these tweets that Burry would eventually claim that in 2022, stocks and other investment assets will fall hard. Burry's predicted inevitable market crash. In a series of now deleted tweets, to say Burry isn't hopeful about the stock market is an understatement. In one of his many tweets that scared followers and non-followers alike, Burry tweeted, "Crypto crash, check. Meme crash, check. SPAC crash, check. Inflation, check. 2000, check. 2008, check. 2022, check." This cryptic tweet implies that the crypto market has started crashing, and so has a meme stock and SPAC, special purpose acquisition company markets as well. Partnered with inflation, Burry believes that 2022 is headed into a financial crisis or recession like what the world saw in 2000 and 2008 during the early 2000s recession and the Great Recession. Burry has also questioned whether this impending financial downfall could spell a worse scenario than the 2008 Great Recession. "Today, I wondered aloud if this could be worse than 2008, Burry said in a now deleted tweet. It's certain what Burry foresees for the market soon, but what signs led him to this conclusion? Unlike in 2008, where stock prices weren't as easy to monitor, today's age allows anything and everything to be seen, even by everyday citizens with average income. Because of this, what Burry sees, everyone else sees. And now it isn't much of a surprise why Burry is confident in saying that a 2022 financial downfall will happen. The red flags. As early as 2021, Burry awoke from his 10-week hiatus from Twitter, warning his followers that the markets are headed to become the biggest market bubble in history, and for investors to brace themselves for a historic crash, even going as far as naming this the mother of all crashes. The S&P 500 index, which is widely agreed to be the benchmark for the US market, has slumped further from 19% in September to 25% in October this year, with analysts predicting that this decrease could potentially reach 48%. Nasdaq, the second best performing stock exchange by market capitalization of shares traded after the New York Stock Exchange, also received a sizable blow of 27%. Cryptocurrency also wasn't spared, as the leader of the crypto Bitcoin also suffered heavily, as it's down by 66% from its November 2021 peak of around $65,000 to below $19,000 as of October 2022. Even popular meme stocks were affected by this financial downfall, with GameStop dropping by 34%, Bed Bath & Beyond dropping by 54%, and AMC Entertainment dropping by an unfortunate 69%. In one of his many other tweets under the famous Cassandra BC at Michael J. Burry, named after the Greek goddess who always uttered true prophecies but was never believed in, Burry said that what the market is experiencing now is very reminiscent of the mid-late 2000s, implying that we're headed towards another Great Recession. He said that we're currently at December 2007 levels, which is the time frame before all stocks dropped significantly lower, implying that the massive drops in stock and crypto prices will happen sooner rather than later. According to Burry, free cash flow totally on sale and ignored by former momentum stocks are coming down, but not far enough, and darling better businesses still had ways to fall. Value was about to take off for years, despite more crashes on the way. Burry also tweeted regarding the mindless driving up of asset prices for index funds and exchange-traded funds, ETFs. Burry compared the current situation to an overpacked theatre, and once investors started exiting the market, the only way out is a narrow entrance, where you will either trample on others or be trampled on. Burry tweeted, "Differences between now and 2000 is the passive investing bubble that inflated steadily over the last decade. All theatres are overcrowded, and the only way anyone can get out is by trampling each other. And still, the door is only so big. Burry also points to the Federal Reserve and other central banks increasing rates to curb inflation as another factor adding to the inevitable market meltdown. This, added with global happenings such as the Russia-Ukraine war and continuous lockdowns in China, have increased the value of the US dollars to new record highs against other global currencies. The British pound got absolutely destroyed recently, and because of this, the Bank of England went on a £65 billion or $72 billion bond buying spree as the increasing power of the US dollar was threatening the UK's financial stability. There have also been reports of the People's Bank of China preparing state-run banks to sell dollars and buy offshore yuan to increase the power of the Chinese currency. The increasing rates, devaluation of other global currencies in contrast to the US dollar, as well as authorities and the government taking rapid action in order to calm down markets, are telltale signs of a return to the Great Recession, according to Burry. Unlike in 2008, where Burry was one of the very few people who saw the financial meltdown happen a mile away, signs are more obvious this time around, with many more financial analysts and investors echoing Burry's thoughts about the current economic situation. Among these is Greg Jensen, Bridgewater Associates co-chief investor, who also warns people that a crushing recession is on the cards and the US is at the center of this global financial bubble. In a SALT, State and Law Taxes, conference in New York, Jensen stated, "The biggest mistake right now is the belief we're going to return to essentially prices similar to the pre-COVID period." Despite the many red flags already present in the markets, Burry tweeted in September 2022 that we have not hit the bottom yet. In a tweet, Burry said, "No, we've not hit bottom yet. Watch for failures, then look for the bottom." 2 SPAC ETFs failing is not near enough, referencing 2 exchange-traded funds that closed in 1 month, namely the Defiance Next Gen SPAC Derived ETF and the Morgan Creek Exos SPAC Originated ETF. From his tweets, it's expected that this is the start of something that we may be seeing more of in the next few months. ETFs failing and stock prices plummeting straight down. Investors of cryptocurrency had a first-hand taste of this crash earlier this year, as across May and June 2022, the cryptocurrency market lost approximately $1 trillion in value, and may see more damage in the next coming months. We've gone over how Bitcoin took a 66% decrease from $65,000 to $19,000, but some tokens had it worse, like Dogecoin, Avalanche, and Solana, taking a decrease of around 90%. The May 2022 crash of crypto was caused by multiple factors, including the recovery from COVID, high inflation rates, the Terra Luna crash, as well as other global factors such as the Russian-Ukraine war and supply chain issues. While crypto is a volatile market and dips in values are to be expected once in a while, a crash of this extent wouldn't happen without the aforementioned reasons, and is reflective of what may happen with the stock market soon. What the inevitable market crash means. Burry has made very valid points in providing his stance that the market is headed towards a crash. But what does this market crash even mean? What does the financial bubble bursting mean to investors and non-investors? Not all bubble bursts are detrimental. Some asset bubble bursts have short-lived effects and only affect a specific part of the market. This results in an undesirable economic situation that affects everyone. For investors, what they could have bought for thousands of dollars a few years back may only cost $100 by the time the bubble bursts. And if the investor needs money right away, this is going to be difficult as stock market prices don't rebound as quickly, especially following recessions. For non-investors and everyday people, a recession leads to overall increase of prices for food and other commodities. Unemployment will take a huge hit, and even those who manage to still secure their jobs may be affected by wage decreases. This will also affect business, no matter what kind, as all products and utilities will see an upsurge in price. Many businesses close down during recession as raw materials and products are more expensive. Yet many citizens have their wages cut down or disappear completely, meaning they have little to no room to spend buying anything more than the cheapest option available. Investors in these businesses will most likely demand their capital to be refunded and reallot this money when the market is more stable. bigger enterprises instead that are known to weather recessions are better, rather than invest in smaller homegrown businesses that can only promise potential. Michael Burry now and his plans moving forward. If you've seen The Big Short, the movie ends with a puzzling line saying Michael Burry is focusing all of his trading on one commodity: water. No, this is not some kind of riddle or secret code. Burry has in fact focused trading on one sole commodity, which is water. It might be confusing to some, as the leap from trading stocks to a commodity like water is a far leap, especially since there's no market to trade water. But there's a lot of reason why the Big Short star decided to. According to the United Nations, water use has grown at over twice the rate of the world's population increase in the last century, and it's projected that in less than a decade, the use of 30% of the world's total accessible renewable supply of water will reach 70%. By 2025, about 1.8 billion people will be living in water-stressed areas. With all this said, it's clear that there is a demand for fresh water, and much like Burry's track record, is one step ahead of everyone else. Specifically, Burry has been investing in water-rich farmland, away from large governmental and infrastructural limitations. In an interview, Burry said, "What became clear to me is that food is a way to invest in water. That is, grow food in water-rich areas and transport it for sale in water-poor areas. This is the method for redistributing water that is least contentious and ultimately can be profitable, which will ensure that this redistribution is sustainable." Burry has been investing in almond farmlands, which are very water-reliant during an era where almonds and almond products are seeing an increase in sales. Research by Truscott states that more than half of the profits of the world's biggest companies would be at risk if water was priced to reflect its true value. For those impressed by Burry's track records, this might be another take from the legendary investor that managed to short the 2008 financial market that you might be interested in. With water becoming scarcer and more important by the day, purchasing water rights or investing in water-rich farmlands or water utilities might just be the next historical choice you can make alongside Michael Burry. As United States founding father Benjamin Franklin once said, "When the well is dry, we know the worth of water." Conclusion. The oracle responsible for calling the Great Recession of 2008 3 years earlier is once again predicting that a financial market crash is bound to happen in 2022 at the earliest. Burry now has an avenue to voice out his analysis and predictions to the regular citizens of this impending disaster, months and years ahead. He has not shied away from bold predictions in hopes to dissuade more people for investing now during a highly volatile market crash, though nothing is set in stone. This may be Burry's first miss in a series of right calls. Only time will tell. We will be thanking him for his warnings and truly call him a financial oracle. But in the off chance that he is mistaken, we will be glad he's wrong, and that means that the economy and the market is at a much better place than he expected.